Today, we're going to try and make sense of one of those crazy days in the market. A day where a war thousands of miles away sends immediate shockwaves right back home, affecting everything from massive corporate deals all the way down to the price of your morning coffee. Let's dive in.
Right off the bat, this quote pretty much sums up the mood on Wall Street. It's a stark warning from UBS, and it just captures that high-stakes anxiety perfectly. There's no clear path forward, just a lot of uncertainty.
So first up, let's unpack the root of all this anxiety, the ongoing conflict, and how its shadow is falling directly across the trading floor.
And here's the core problem investors were facing. On one hand, you had President Trump on social media, posting about great progress being made in Iran. Normally, that kind of thing would send stocks flying. But then you look at the reality on the ground. More troops, more missile strikes, and it's a completely different story.
This quote from Thomas Ayer really nails why that early optimism just completely fizzled out. The market is basically saying talk is cheap. It's looking for real action. And there's this growing fear that, as the analyst says, this is a situation that can't just be de-escalated with a tweet.
So what does a market caught in that kind of tug-of-war actually look like? Well, it looks like this. A completely mixed day that just screams indecision. You see the Dow barely squeaked out a gain, but the broader market, the S&P and the Nasdaq, both finished down. There's just no conviction anywhere. Okay, let's pivot to the most immediate economic fallout from all this, that massive shock to oil prices and the huge headache it's creating for policymakers.
Just look at that bar for U.S. crude. It closed above $100 a barrel for the first time since 2022. And listen, that isn't just some number on a screen. Hitting $100 is a huge psychological line in the sand, and when you cross it, it sends ripples through the entire economy. And here's where those ripples hit home for pretty much everybody. For the first time in years, the national average for a gallon of gas is over $4. That's not just a headline. That's a direct hit to your wallet that actually changes how you spend your money.
All of this puts the Federal Reserve in a really tough spot. Fed Chair Jerome Powell, he signaled that they want to just look past this energy shock and hold rates steady. But he also warned that if these high prices stick around and start to feel permanent, they might have to raise interest rates to fight inflation. And that, of course, could slow down the whole economy. It's a real catch-22.
Okay, so let's zoom in from that big picture and look at two specific stories that show exactly how this anxiety is playing out, both for a corporate giant and for a small local business. And this is just a perfect illustration of the two sides of that coin. On one side, you've got Sysco, a huge food distributor getting absolutely hammered by Wall Street for making a big, risky bet in a super uncertain time. And on the other, you have Reverie Roasters, a small business just trying to survive, having to pass on those rising costs to its own customers.
So why did Sysco's stock drop a whopping 15%, making it the biggest loser in the S&P 500? Well, for investors, this deal just had red flags all over it. The company was jumping into a totally new type of business, paying for it almost entirely with new debt, all while its balance sheet was already looking pretty stretched. In a nervous market like this one, it was just way too much risk for people to handle.
And then there's Andrew Goff, the owner of Reverie Roasters. This quote, it just brings the abstract idea of inflation right down to a human level, doesn't it? He's already eating half the cost increase himself, but he can't absorb it all. It just perfectly captures that tightrope walk that so many small business owners are on right now.
So with all this chaos, where do you even put your money? This brings us to the hunt for defensive stocks, companies that can hopefully weather this kind of storm. A lot of investors are turning to a strategy focused on what they call compounders. Let's break that down real quick. Basically, think of them as high-quality, really resilient businesses. They have what you call a strong moat, something that protects them from competitors, and they're good at growing steadily over time. That makes them really attractive when everything else feels so shaky.
And to make that a little more concrete, here are some examples of what analysts would call a compounder. Look at this list. It's all over the place, right? Pool supplies, aerospace parts. But what they all have in common are those core traits of being durable and really hard to copy. These are the kinds of companies that investors flock to when they're looking for safety.
All right, so to wrap this up, let's look ahead. What are the key signposts that everyone's going to be watching over the next few days to get a sense of where we're headed? This week's calendar is absolutely packed. On Tuesday, we're going to get a read on the consumer from Nike's earnings and a big confidence report. Then on Wednesday, we'll hear more from Fed officials. And the whole week really builds up to Friday, and that's the big one, the March jobs report. Every single one of these is going to be picked apart for clues.
And here's the final crucial wildcard. There are whispers that the White House is looking for a quick political exit from the conflict.
The risk? Well, that could happen even if the Strait of Hormuz, which is a supercritical waterway for global oil, is still partially shut down. A political win is one thing, but the economic damage could stick around long after the fighting stops.
And that really leaves us with the central question hanging over everything. A quick peace might be on the horizon, but is the economic cleanup going to be just as long and messy? That is the single biggest unknown, and it's what we'll all be watching.